Hello, fellow traders. How you doing? Tom Willard here with another video. This one's going to be on the trading plan, something that a lot of people have approached me about. Things I've worked out. This is something I've worked on with many students over many years, and it's one thing that you'll get a number of versions out there that people teach, and I think there is no right answer. But what I've done here is basically thought through the process and said, look, it really comes down to these six things. There may be offshoots of this. Obviously, you can expand and couple certain things, but these are really the major six things that I see that should be a part of your trading plan. Um, whether you're a longer term trader, swing trader, or a day trader or micro trader. So let's talk about these topics piece by piece. First up, we've got the first one, personal goals, lifestyle, and outcome. What this entails is really it's kind of a nice way to start your plan and say, look, here is what I want my outcome to be. Here's why I'm in the trading game. I was involved with a number of education, and right now I'm not doing a whole lot of educational stuff beyond these YouTube videos for folks, because one of the major reasons I got into this game was for the lifestyle, which is quite a freeing lifestyle, and you have time to spend more time with your family, to do whatever your hobbies may be outside of the trading world. But the trading itself is a full-time job, in my opinion. I think there's people that can do, contribute a couple hours a day and a few hours on the weekends and do fairly well at this. It just depends on how far you want to go in the business, and each person's different. It's not a hour for hour basis. Trader A spends 40 hours a week. Trader B spends 20, it doesn't mean Trader A is going to make twice as much money as Trader B. It depends on their personality styles, their experience, how well they adapt. These are all important things. The ability to be creative and adapt are huge, and it's something that I see as missing in a lot of the training materials and education that I see that's out there for sale that I've had experience with. It's very there's a lack of creativity and ability to adapt in a lot of cases. Not in all, but in a lot. So my approach has morphed over the years to where now creativity and adaptation are major parts of it. And I've got other patterns that I've been watching and formulating hypotheses around. And then, of course, collecting data and proving out. One is the tornadic formations I've mentioned in past videos. But I'll look to probably put some of that stuff encapsulated in some video formats in the near future. Anyway, back to this. Personal goals. So what is your lifestyle going to look like? What do you want it to look like? Okay. What is trading and investing going to do for you? Some of you may just want to be picking up a certain small amount on a monthly basis, and of course extrapolate it over a year. Or some of you may want to do this full time and not do anything else but trade. So it really depends on the person. Some people love their day jobs and want to do this to just build their wealth on the side. Some people hate their day jobs and want to do this full time. So there is no right answer. But you need to, in your trading plan, identify this and flush out all the details, because when you go into creative visualization, which is a big part, in my opinion, of my success and of what I teach students that work with me, is that it's very critical, okay, to make sure that you're visualizing, you're seeing these things flushed out in very, very fine detail, okay, around what your lifestyle is and what you want. Okay, so that's the first part of your trading plan outline. Now, part two here is the trading goals. Okay, so you get your personal goals, which is, what kind of jet you want, what kind of vacations you want to have. Do you want to fly first class? Do you want to donate a certain amount of money to your favorite cause? Do you want to, send your children to whatever college they choose from, where cost is not an option? There's really the sky's the limit with regards to what you can envision for your life. Trading goals now are more based on what are your objective goals with regards to your trading. Okay, so we'll get to some of these other things in the next items here on the trading plan, but I think that your goals should be based on R units per month, which means how much R you anticipate or would like to set as a goal making in a month. I'm a firm believer in not doing daily goals with regards to day trading anyway, because I find that it's really an 80-20 rule, and you're going to have down days. And what happens is if you put too much psychological pressure on yourself on any given day to force yourself to make a certain money, it just typically, with a lot of especially beginners, it leads to bad things. I've seen quote unquote professionals lose a lot of money with that approach too. So I find, and again, this has been through over, good Lord, how long have I been doing this? Over 10 years of doing this, okay, that I've morphed to the point of, the point of seeing from my experience that look, it can't be on a given day. You got to let it go, in my opinion. Go toward the smallest unit would be a month, maybe a week in some cases, but a month, and then looking at the quarters really is what I do with my trading. Okay, monthly and quarterly. So based on R units per month, okay, how much paper trading you do? Again, depends on the results you've had. You may be just starting for the first time, and I would strongly suggest to everyone starting to paper trade. Don't be in a rush to make money. Learn the process, and the money will come. Okay, so I'm a firm believer in paper trading, so that you're actually in the game, but you're doing realistic trades with imaginary money. Okay, but you're putting it on the line. Or the other option is some people they don't take it. They have a flippant approach when there's no real money on the line. So put small shares on the line. Okay. Now, if you do really small shares, then of course the commissions will eat you up more because they're a larger percentage of what you're putting down. But again, you've got to be willing to pay for your education, your experience education through this process of paper trading or small share trading. I strongly suggest if you're new to this, do not go in with both feet with a ton of money on the line and a lot of risk. Okay, paper trade first. The money trade will come later, and again, I'll discuss that as you morph to that. But when you're paper trading, how long you paper trade for, and when you meet a certain goal for a certain amount, when can you flip the switch to go to money or larger shares, okay, or larger risk, okay? Increasing your R dollar amounts is what that means here, okay? So personal goals and trading goals. Let's move to the next section. Okay, next piece of it is your trading approach. Okay, what's your edge? Okay, what's your edge going to be? What patterns do you trade? Some people like to just trade breakouts. Some people like to trade pullback, Fibonacci pullbacks. Some people like to just buy support, sell resistance, or sell resistance, buy support. There's different patterns and formations you can trade. Some people trade buy stocks that they find that are good fundamental companies that have certain PE ratios that get below a certain rate, okay, or their yield. If you're looking at dividend stocks, they get to a certain point and they buy in there. Okay, now again, I don't condone that. I think the fundamentals are important to look at, okay, at this stage of my life. But ultimately, all of my trading decisions are made because of technicals, because of the charts. But what fundamentals do, and what a lot of the information that's out there in the world around the fundamentals and the companies, what it does is it gives me kind of some targets to look at, and then I of course go to the charts, and then the charts ultimately dictate whether I put my money on the line for that particular idea. So what is your trading approach? Are you using fundamentals? Are you doing technicals? Are you like me where you use fundamentals and technicals to find ideas and then use technicals to make all your decisions? Okay, or are you going to use fundamentals? Okay, I'm not. I think there's millions of ways, maybe not millions, but many, many myriad ways to make money in this market. And you've got to do something that's true to your nature. Okay, that's true to you, and don't adopt something just because you think it's going to work for you because it's worked for someone else. Okay, oftentimes it will, but really what I've found out is that over 90% of this game, 95% even more, is psychological. And psychology. In fact, I'll do a video on that soon because that's probably that's 95% of it, and most of the material out there, education-wise, is charts and fundamentals. When really it's your own personal psychology that's going to make or break you in this game, in my opinion. Okay, so day trading. Are you going to do day trading? Are you going to be trading on 2-minute charts, 1-minute charts, 3-minute charts, 5-minute charts, 15-minute charts, 10-minute charts, 60-minute charts? Are you going to be swinging on days, weeklies? Okay, are you going to trade monthly charts? What chart? Now again, there's no right answer. All right, what's right for you? You got to figure that out. All that you can trade on any of those time frames and make money. Okay. Obviously, the more smaller time frame, the more opportunities that are going to come your way if you're a technical trader. Okay. Because there's more candles, there's more ways to make decisions with regards to more candles. But of course, at the very low time frames, there's also a lot of noise too. Okay, so you've got to be a pretty astute trader to get through some of those things and have some experience. So you swing trading, day trading, both. Okay, and what time frames you're going to focus on? You've got to have this identified in your trading plan. And then of course, like I said when I first started, your patterns, your edge. What edge are you trading? Okay, you can't just trade something because my gut feels that it's going to go higher, so I'm going to buy it. That's not an objective edge. Okay, you're feeling. Okay, now as you get to the higher echelons of trading, you develop a sixth sense with regards to things. then you can, it's more of a, what's that, subjective trading. And you can do those things, but it's never really a part of your plan. I'm doing some of that stuff now, but I don't have it in my plan. It's not something to say, okay, when I get a gut feel, it's just something that when I'm in the moment and I'm there and I'm making a decision, I'll make that decision. Again, it doesn't always pan out, so you've always got to have your stops, which is a nice segue into this next section of the plan. Now, in fact, in this section, I'll go as far to say that these section 4 and 5 here are probably the two most important things of your plan. It's all important. You need it all. But to me, these are the two most important, and they're two most violated with regards to people putting them in a plan and then just blowing them off because they want to just, I want to make money and I don't want to have rules. Okay. 4, risk. You've got to know what your risk unit is, an R unit. Okay. R is the first letter of the word risk, hence R's. Okay. R unit. Okay. What is your maximum amount of money, dollars, okay, or euros if you're trading in Europe and you're listening to, or whatever your currency is? What is the max amount of money that you will be willing to lose on a given trade, okay, on a given trade with regards to your R unit, okay? That is your atom, okay? It's not the size of the stop. It's not the price of the stock, okay? It's not the percentage of your portfolio, in my opinion. It's what are you psychologically, comfortable with losing on a trade. Now, that may sound negative, but you've got to be able to say, look, for example, just using an easy round number, $100. Okay, so when we say, you know what, if I lose $100 this trade, I'm not going to lose sleep over it. I'm going to shrug and go, the hell with it, and move on to the next trade. Okay, so don't just flippantly make a decision on this. Think it through. Think, what dollar amount can I afford to lose where it won't manage, I won't even think about it again. I'll move on to the next trade. That really needs to be your starting point. And if you don't like losing even a dollar, guess what, my friend? You should start off paper trading then. Completely. That's screaming on the wall. You just need a paper trade, okay? And build up your confidence in your system and your edge. Because by doing these things with your paper trading, okay, you're going to collect data in part 6, okay, that's going to give you more confidence in whether your edge works. Because again, there's just an edge. None of the patterns work all the time. Nothing does, okay, as far as I've been able to find, okay? And I gave up that pipe dream a long time ago, okay? It's not, and it doesn't have to work all the time. But the thing is you have to be willing to take those losses in stride. And so many people cannot do it. So you got to know what your R unit is going to be to begin. Okay. Also, in addition to your R unit, which is the maximum amount of dollars you are willing to lose in a trade, what is the maximum amount can you lose in a day without losing sleep over it or having a conniption, okay, or a week or a month? Where's your circuit breaker? So, for example, going back to that instance of the person willing to lose $100 on a trade, he or she may say, you know what, the most I'll lose is $300 in a day. If I lose $300 then I want to shut it down, okay? Because if I lose any more than that, it'll start to really, really bother me. I won't sleep. I'll revenge trade, et cetera. So that'll be more covered in a psychological discussion later, okay? So what is your maximum dollar amount, and where are your circuit breakers, where you shut it down? Because another thing I've found through my experience of doing this for so many years is that typically when the fire starts, people throw gasoline on the fire. And so when you get into the spiral of a few losses in a row, typically any decisions you make after that, you're going to be seeing red or whatever if you're human in a lot of cases, and you're going to make a bad situation even worse. And so I found, although it's one of the hardest things for people to do, okay, is you need to figure out how to just shut it down after you hit your circuit breaker and say, you know what, I'm done for today, okay, with at least money trading. If you want to continue to paper trade, great, and I bet you, I almost guarantee you continue paper trading, you'll find you saved yourself thousands of dollars by stopping the bleeding at the point of your circuit breaker. So, huge section here. You've got to nail this down exactly to your personality, and then of course you've got to follow it once you start trading this plan. Okay, my personal favorite, trade management rules. Okay, you've got to have your plan. Say, look, here's my stops. Well, here's where I'm going to put my stop, and if my stop is hit, I'm going to take it. Period. There's no, oh, but this time it's different, or I'm going to do this. No, stop's hit, take it. Okay. Don't pretend like you know it's going to be different this time, like it's going to happen differently this time. Take your stop, no questions asked. Okay. You will find that there will be many, if you do this long enough, you get times when you get stopped out to the penny and the thing's going to reverse and go completely in the direction you would anticipate it would. And it'll sting. Okay, but at the same time, and you'll focus on that if you're human. And what you will tend to blow off is when those stops saved you tons and tons of money. Okay, I went back and did a study years ago around my stops, and I found that in a given day, on average, my stop was saving me thousands of dollars in a lot of cases. And my circuit breaker was saving me thousands of dollars when I'd have 3 losses in a day or 4 losses, and I lost my amount. And if I had kept going, good Lord, the damage I would have done was, in some cases, hard to recover from. Okay, so these are very important things that you need to A, put in your plan, and B, follow once you start trading. So what are your stops? What are your targets? When you get to your target, okay, are you going to sell all or are you going to sell part? Okay, or are you going to move stops up and try to go for more? Okay, are you going to scale into position? You're going to put a test position in at, say, a support area. Okay, when are you going to scale out? Are you going to sell in thirds, sell in halves, sell in quarters, sell it all, set it and forget it, one shot, one lot in, one lot out? Okay, what are all these things? What are your disaster rules? Say you're in a swing trade overnight and you wake up the next day and the thing's gapping out in the opposite direction that you are in the position by 20%. What do you do? Okay, what do you do? Do you bail? Do you buy more? Do you short more? Okay, do you give it some time after it opens before you make a decision? Okay, do you just bail right away in the pre-market? What do you do? Okay, so all these things you've got to work out, and a lot of this, it's a big cycle, it feeds off itself because a lot of these decisions and rules you're going to change. I've changed throughout the years because of this next section, being the metrics and improvement. Okay, you've got, your trading, my trading approach is morphing. Okay, as I get data and information that shows me things aren't working anymore or things aren't working as well, or I identify things that may work better, don't be shy, man. Adapt. Okay, make the changes. Okay, so your risk unit is going to change when you've met your goals. Okay, you're going to probably risk more money per trade as you get more confident. Your trade management rules are going to change. You find a certain way of managing your trades is killing you. Okay, your stops are too tight. Okay, or your stops are too large. Okay, you want to increase your win percentage. Okay, then decrease your risk, or you want to let them ride a little more, lose some win percentage. And I found too that that's another thing that for me, when I let go of this win percentage thing and not wanting to win so much and just focused on dollars in my account, R units made, my win percentage, okay, went south of 50%. Okay, but the income went up. And I think that you'll find, again, you've got to run that on your own system. Your system's probably not the same as mine, probably, different. But until you run the numbers, okay, you can find and be creative about different ways at what's going to make you more money. Because the bottom line is you're not doing it for wins, I hope. Hopefully you're not that insecure. You're doing it for bottom line dollars in your account at the end of the month. At least I am. I'm a bottom line guy. I could win one trade and lose 99, and if that puts more money in my pocket, I'm going to go with that route. Okay, but I need to know that that's going to consistently happen. Okay, and I don't know that, but all I can do is base it off my statistics. Okay, and my statistics will help point me in that direction. But they change, they morph. That's why this is a constant thing, and it's for some people it's a lot of work. Okay, and that's why I say really to do this well, it's a full-time job in my opinion. Okay, I haven't found a way to make it less of a full-time job, but it's fun if you love it. Okay, you love what you do, then then to me it's not even work. Okay, so metrics and improvements, the last section. You've got to track your performance. Okay, you've got to assess it, which takes time and hours. I spend hours every weekend doing this. Okay, still even to this day, because I look to get better. I'm nowhere near where I can be, in my opinion. And you've got to kind of stay up with the times. You've got to continually improve, be creative, and adapt. Okay, so this is a constant cycle. Then when you do this, you get information, and that information may say, hey, you need to change your risk unit. You may need to go from money trading to paper trading. Okay, you may go from paper to money. You may go to larger shares. You may change the patterns. Your edge may be producing crap both in wins as well as in returned R's. Okay, your time frames you may be getting cut to pieces on noise trying to trade the first half an hour of the morning. Okay, on a 1 minute chart, thinking that you're seeing demand build up in a base when all you're doing is getting shook to you know what, okay, up and down. So these are the major keys of your trading plan, in my opinion, and you've got to flush these out in detail, okay? And then, of course, the most important thing is to follow it and execute on it, okay? Establish your goals, Okay, follow your edge. Don't take haphazard trades. Like if you say I'm only trading breakouts and then you start doing pullbacks just for the hell of it, then you're not following your plan. Okay, you got to follow your plan. So you may say, well, I'm gonna in my plan, I'm gonna trade breakouts only with money, and then everything else I'm gonna do with paper. Great. Now you can trade anything you want, track it all. It's a lot more work, but at least you'll be getting data and information on those other things. Now, kind of talking on a side note around looking at past performance, um, back testing. One of the best things to do is to build it as you go, in my opinion, because until you're there in the moment, in that market, in the moment, at that instant in time, you don't know for sure that you would have taken that trade until you're sitting there. Okay, so you can go back and look at data from the past X amount of days in TradeStation or whatever you're using, and say, okay, well I'm going to just test it. But when push comes to shove, you don't know, because I'm sure that you've all experienced where you've been sitting there for a certain juncture, and you were everything was screaming you should take this trade, but you didn't because you were scared for some reason, or everything was saying, it's a questionable trade, but you took it anyway, depending on your psychology at the time. Okay, so the best way to build up this information, I think, is to just start trading, establish this plan, trade it, track it. Okay, you may change your R unit with more feedback here. You may change your circuit breaker. You may find that when a disaster happens, there's a better way to handle it than what you had originally in your plan. Okay, your trade management rules, run different models. What if I did this? What if I did this? Would I make more money? Would I win less? Would I win more? Okay, and ultimately, I think it comes down to it's a dollars and cents thing. Like I said, it's all about business and making money. It's not about wins versus losses in the number comparatively speaking. Okay. So anyway, I hope you found this useful. A little bit a different taste, but this is also very, 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 that's enough varies, important to your success as a day trader, swing trader, investor long term. You've got to have these things lined out. Okay. So until next time, continue to trade well, and we'll talk to you soon.